Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, June the 12th. The year's 2020. Let's talk trading. It's time for the weekly wrap up. Before we get into it, I just have to let everybody watching know that these videos for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, weekly wrap up. Here we go. And I hope during the week you were profitable, and on your losses, you didn't lose any more than you were willing to lose on a trade. And I'm sure you had your brain management in gear. For the week, all gaps have filled. So for those of you who trade the weekly gap, that weekly open, it paid off. Second red day in a row here. You can see we're below the previous mid dot. Those mid dots. I'll have to do another video on the mid dots because I definitely use them. And right here for the weekly opening range, you see here we popped out the top and bottom on Tuesday, Wednesday out the top, and Thursday, Friday bottom. So for the traders who like to use that weekly open range, there it was. Horizontal line trade. Inside bar, you can see we've fallen back into the inside bar monthly 2 months ago. Still not that many inside bar trades happening this week. For the range, as you can see, we've got more over 100 than under. A nice breakout here of the previous day's low at 25.86. In fact, I got some of that trade. Not all of it, but I got some of it. On the buy zone, we took out the pivot. You see here, these shorts, those signals were to be ignored, only taking the long because we hadn't taken out the pivot. You had the one signal and you were in. Then it was okay to short. You can see here you got the trigger, some movement back. But if you didn't have your stop till here, you took a lot of heat, but then it came back in your favor. Rat zone. Right now, it's time for the green rats to feast. In fact, Walmall and I, we took a trade up here, and I was saying, if we would have just held on, but when you're trading and you're looking to, take a handful of pips, that's what you get is a handful of pips. Our trade plan doesn't include taking hundreds or 50s or 10s or dozens of pips. We're just looking to get in, out, take the money. Now, earlier this week, I think I mentioned the weekly pivot, 125.73. You see, we took it out yesterday. So once again, those pivots, the pivot traders proved to be profitable. On the daily, we see we hit that daily pivot. We missed the one yesterday. That's a missed pivot. If you see the description here, then that's a missed pivot. So we've got 2 missed this month. On the weekly, you see we took out that weekly pivot. Still missed the one last week, though. Oh, and by the way, traders, let's just be clear about something. I show various methods. I don't expect you to trade them all. What I would hope you do is you pick one that you like, that you think fits your personality, the way you want to trade, and that's the one you trade, and that's all you trade. And you pick one pair, and that's the only pair you trade. Because people are saying it's so confusing, there's so many charts and blah, blah. No, I don't even trade all these methods on a given time. Because what would happen is you'd be overloaded. You wouldn't know what your trade is. You'd be thinking long, you'd be thinking short, you'd be messing up. So yes, I show many different methods, a handful of methods, not but most of them are horizontal line based. Some of them are target based, like the pivots. But the thing is, just pick one method. If it's the rat zone, pick the rat zone. If it's the wick zone, don't even try to combine them yet, because you don't. If you're just new to it, Don't change the thing. Don't try to combine them. They've all been statistically proven. You start messing with it, you throw the statistics. It'd be like if you were a casino and you start changing the rules of poker or something, or roulette. No, the odds are already in your favor. Leave it alone. I've seen too many people who get take one of these methods, and the next thing you know, they're throwing a couple squigglies on it, and they're overlaying it, and they're just making a mess of it. And you wonder why you're not profitable. No, stick to the one method with one pair and master it. Okay, if you're doing the wick zone, in and out, in and out. And people, this is a 2014 indicator. It's 2020. You really don't want, you can, if you want to make a donation and specify 2014s, I'm more than happy to do that for you. But you really don't need it because I've set up TRO HL5 to do the same thing. Once again, sticking with the method, simple price action. Okay. The sweet spots indicator, I'll show the indicator. Sweet spots indicator right here. That's really the only one you need out of all of these. You get on the H1 time frame. You trade the candle color at the line. So here, candle color at the line was red. You see it moved that. Maybe you scratched the trade. Maybe you took 2 pips. And in the beginning, that's what I would want you to do is learn to take 2 pips. You get in a trade, in and out, in and out. Oh, let's just say you did that. Oh, I've been up since 3 o'clock my time, doing some trades with Walmart. But the point is, and pretty much I was trading a high-low breakout. But here, if you took 2 pips once, twice, 3 times, 4 times, actually you could have taken it 4 times, 5 times, 6 times, 7 times. That's 14 pips. Okay, and if you're trading, say $20 a pip, I'm going to start calling that minimum wage trading. Well, let's just say you're trading $10 a pip, and you took 2 pips. That's $20. $20 an hour. That's better than minimum wage. That's not bad. So think about it. When you start out in the job, you might start out at the low level salary, the low level wage. Make trading the same thing. If you can beat your minimum wage in your state, then you're doing okay because you're making money. If you're not making minimum wage trading, then you might need to rethink something. Rethink your strategy, rethink your position size, rethink what you're doing. But just target for minimum wage. And if you have $1,000 account, that'd be, what? One lot, $10 a pip. You go in, you take your 2 pips, and you're done. Or maybe you do $5 a pip, and you make $10 every 2 pips. Maybe because that way you could have a little bit bigger stop loss. Wouldn't be so you wouldn't get your stop loss would be further away. So your risk would be the same, but your stop would be different. Once again, on the high-low breakout, this is one of the trades I took here. That short, oh, that was nice. I didn't take the McGill apart. I got my handful of pips, but inside bar, short, the H1, previous H1 low. That was a nice trade, which I would have just stayed in it the whole time. But that's hindsight. That would be hairy hindsight. But you see here, and just right here, right now, there's about a 7 pips to be had, taking the short here at 34. Now, these range gauges, I want to start going over them. The D1 high minus low range, it's at 133 pips. You see here, it pushed out here. So now it's at the 65% level. You see here the day before was 75. Then you had 3 days ago was at 66. So right now this is telling me that prices pushed out, and maybe it's time to start looking for a rat zone trade, a green rat. And the green rat would be here, close the low, 7 pips off the low right now, the daily low, now 9. 6th percentile range. So you see here, price is moving up just as I called it. So you look here, and then if you're in the green rat territory, you come down here. If you're in red rat, you look here. So see now, you see how price is moving up? Now, the other thing is with these breakouts, what you want to look at is you look at the hourly range to see where it is, if it's going to break out or not. So the first time it hit this line, it was probably somewhere maybe 35 percentile. So it's like, yeah, price has to move. Look at what it's been doing. So take that breakout right there. Then you start to look here, and this would be previous low minus the low. See, when it got down to 15, that's the 81 percentile. When that range was 15, 81. So you start thinking about taking the trade off, taking your pips off the table. So that's how you use that. And this is the smart ranges loaded up 6 times. In fact, I'm going to do I'm thinking about doing another template and actually having some more of the ranges, maybe even the weekly range. But if I remember correctly, I don't know, is it on this one? If I switch over to weekly, yeah, if I switch over to weekly, you get these. But I'm definitely thinking about changing this up a bit just to give some more detail. And maybe instead of having 5, I might only go back 3, have 3 bars worth instead of 5 bars, so I can have more instances of the indicator. And then I was thinking maybe just have just the current. But I like to look back and just so you get a comparison to see when you're doing the analysis. So you see here, price is now moved. I don't remember where this was when I started, but I think it was around 13% or 9%. You see how it moved up? It's like I called that trade, that green rat trade. I said, start thinking about it. So that's how this works. Yes, these are donational. But I want traders, especially if you're new, you want me to teach you how to trade. You're asking if I do online. This is it. And it's really simple. Candle color at the line. You go short at this line, you go long at that line. The previous H1 high and low. That's it. There's nothing else to do other than make sure you have your stop loss in place so you don't lose more than you're willing to lose. And all we're doing is just taking advantage of statistics here. Nothing more, nothing less. And let's just go back here just to take a quick gander at something. Where is it? No. Where did I put it? Since we were talking about the rat. And this is just the rat zone indicator, TRO rat zone. And that's in the freebie. In fact, I posted it on Crestlick. I posted it on the Facebook file section. But you can see right here, you had a red candle closed, green candle closed, take the high there, and there was pips to be had. But once again, if you don't take those pips off the table, the market just might take them back. So you can see here the green rat, 20%, was at this level here, 33. That's the smart rat. And that sound is that price just broke out once again of the low, the H1 low. But I usually don't double dip. It just depends. Sometimes I do, sometimes I don't. So that's it, fellow traders. I hope you have a profitable week. You had a profitable week. I hope you have a fun and safe weekend. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And don't forget to subscribe and click the like button and click the bell so you get the announcement. And also share the video all over the internet. The Rumpled One signing out.